Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Happy Pi Day. Today is March 14th, and let's discuss our recent trade. If you remember, back on March 8th, we took a significant loss. We lost this amount of price, and we decided rather than to stay in the market, let's go ahead and exit and hopefully look for a drop in price. That's what we were predicting, is a drop in price, and then we would buy back in. Luckily, the market did fall about 1.8% here, and we decided to wait it out one more day, even though this is a pretty good entry point. One more day, the market fell another 1.4%, and that's when we decided to go back in. So let's watch that trade happen live. As you can see, the order went in and it's filled. By waiting, we avoided a 3.2% drop in the market and re-entered at a lower price. That's always a good idea. Although from here, it's impossible to know what's going to happen next. The market did open on the next day and gained some ground throughout the day, but ended up closing up about halfway up the candle. On the following day, some additional gains were had, and we closed the trade with about a 2.5% gain. Let's watch that trade live. This is another example of a trade actually taking a little time to complete. During this time, you may notice that I'm also adjusting my limit order to try and get it to fill. Eventually, it partially fills and then finally fills. This took a little work, but it's important to complete these trades rather than leave them open. One interesting note is, while this trade was open, we had a few banks fail over the weekend, as well as inflation numbers reported today on the 14th. This, of course, could introduce a lot of volatility and still might. After years watching the news and markets, I would say one piece of news never drives the markets, and it's best to just try and make your trades based on your strategy. One other thing that I'm going to mention is, you may have noticed that I tend to track in percentages rather than dollars. I do that for a couple reasons. First, it doesn't matter how much you trade. The results in terms of percentage gains and losses will always be the same regardless of the dollar amount. It also lets you compare other investments on an even playing field rather than on dollars where the invested amounts may be different. And finally, sometimes there's a significant amount of money involved. I'd rather not get emotionally connected as the market moves, and thinking in percentages keeps my emotions out of my trades. And frankly, that's good advice for everyone. So that's what's happened in this last trade. Let's head over to the tracking sheet and see how we're doing. All right, here we are on our tracking sheet. On the 14th, the S&P closed at 391.73, and that brings the year-to-date performance to 2.43. So the S&P is up 2.43%. We gained 2.65% on that last trade. That wasn't too bad. And that certainly has closed the gap. We used to be trailing by over 6%. Now we're just over 2%. And at this point, we're just trailing the S&P by 2%. Another piece of good news is we're finally in positive territory on our own returns with a modest 0.2%. But hopefully we'll continue to do a little better as the year goes on. So just looking at the chart, S&P 500 is up 2%. We're up 0.2, but we're certainly making gains against our losses. Just one thing that I do want to point out is when the markets are falling, I'm also expecting that we're going to be losing as well. What I'm hoping for is we're just not going to lose as much as the market does. So if we can maintain and balance our losses as the markets are falling, that's not too bad, which is the case right now. We're trading SSO, which is 2 times the S&P 500. It performs twice as much as the S&P 500 for any given day. So what we're hoping to do is at least stay close on the downward movements in the market, which is clearly where we are today. But as the market turns around and starts to recover, we're hoping to really gain against the S&P 500. So I will tell you that, as the markets are falling, I don't think we're going to be doing, exceptionally well against the S&P 500. If we actually outperform it, that would be amazing. But we're really hoping at some point during this year, the market's going to have a better uptick and we'll be able to make some gains. And you can kind of see that on our prior year, right in this area here, because the S&P was down something like 18%, we were down something like 6%. But that really came as a function of the markets actually recovering a bit. So hopefully on our next trade, we'll continue to make some gains and hopefully start overtaking the S&P 500 benchmark. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.